Hello Wolfpack, back into Bitcoin today. I'm feeling a little bit better from COVID, but not fully recovered yet, and so you'll have to excuse my voice is a little bit raspier if I take a little bit of a break here every now and then. But essentially on Bitcoin, we're kind of following the trend perfectly, and you know, this is a daily update, so we're going to talk about some stuff we covered yesterday as well. And what we talked about yesterday was the fact that on 4-hourly chart on the lower time frames, we are seeing a glimpse of bullishness on Bitcoin that would suggest that, hey, maybe we don't just break down below this dotted line, as soon as we get there. Now, obviously, Bitcoin has been in an ascending wedge / bear flag structure. You know, that structure is targeting, let's just get a measured move here from the breakout zone. That structure is targeting 23K, which is, by coincidence, the same region we are targeting based off the 4-year cycle theory. The 4-year cycle theory is targeting 24K on the 200-week SMA by around November to December. We also have a lot of evidence for this stacking up majorly for a May crash. I'm of the opinion that in May or early June, we will be seeing a 30K price on Bitcoin. I've been calling for that for months. I've also been bearish on the whole market as it is since 63K for people who don't know my channel. I've been one of the few here that have really called the top for Bitcoin. And so I'm sticking by that. I'm continuing to stick by it until I see a reason to kind of disprove that theory. And at this point, you know, what would disprove my theory? Disproving my theory would be a break above the 200-day SMA, which we rejected on March 28th, and breaking above the 200-day SMA and also breaking above the ascending channel structure as a whole would be a pretty good, confirmation of my theory being disproved. I don't think either of those things are not going to happen. I don't actually think Bitcoin's going to get to 47K again in this dead cat bounce region. I think that Bitcoin will reach 24K again. I think that Bitcoin will reach 24K before it reaches 47K is what I'm saying. And so, you know, now that we've had this breakdown from this ascending channel structure with these two solid yellow lines, the next logical step is a swing downwards towards this dotted support line structure. However, it's a little bit more complicated than that because on the daily chart, we have bullish divergence. We also have a MACD cross coming in quite sharply. And as you saw on the 4-hourly chart, we have a bullish wedge formation and a descending wedge formation. We also have bullish divergence on the 4-hourly chart there on the RSI. So although the logical structure based off macro is a drop down to 37K to this dotted line here, you know, honestly, we could actually see 37K before seeing one more pump upwards. And if we're taking a measured move from this wedge from top, from the first test of the top to the first test of the bottom, that's how you get a measured move. And let's apply that to a supposed breakout zone. Say we touch 37K before we break out, that could happen. We're looking at around 41.5K Bitcoin to about let's just say 42K Bitcoin. And so essentially Bitcoin is telling us right now that, hey, before we break down, before we go down towards 37K and below, we're probably going to have one more short-term upswing to possibly as high as 42K. At the very minimum, okay, a retest of the bottom line of this channel formation, which is now a resistance line, by the way. And this is what I talked about yesterday. I talked about the fact that Bitcoin could just dwindle down a little bit more as per that wedge, and then swing up to the resistance line, and then reject off that, and then do something like this and crash downwards, right? I would see that as a likely scenario, but I think the highest Bitcoin could go under these patterns we're seeing here is 42K, right? I could definitely see a 42K Bitcoin within the next few days here, as per that descending wedge formation. However, as I've kind of covered extensively, I don't really care about the short term too much because I don't see us getting above that region. And what is in that region? Why am I so confident about that? In that region, we have the center line of the Bollinger Bands for 20 SMA, we have the 50 SMA, we have the Ichimoku Cloud, we have the Gaussian Channel center line, which is about to flip red, by the way, we have the Bull Market Support Band, which is the 20 SMA and the 21-week EMA, we have the 75 SMA. So we have 1, 2, 3, 4, 5, 6, 7, if you count the Bull Market Support Band as two things, major resistance zones, dynamic resistance zones at 42K. On top of all of that, we have 42K as a major static horizontal resistance zone. As you can see, if we zoom out here, you can just look at the chart for yourself. You can see the amount of times 42K has acted as a critical resistance or support, at least vaguely, over the course of 2020 to 2021 to 2022. All right, so yeah, I mean, I see it as extremely unlikely that we break above 42K given the macro situation. So again, I think 42K, a swing up there is possible. I just don't think it matters because I don't think we're going to break above it. So the macro structure is going to stay in my opinion. Whatever happens here in the shorter term, even though we're seeing some, definitely some bullish price action here, I really just don't think it's going to equate to anything, and hence I think it's kind of irrelevant. You know, I hope you guys understand that. And so just moving on, I guess, moving on to the kind of a longer term time frames. Now that we've established what's going on in the shorter term, we could see a swing upwards, but who really cares, right? The longer term time frames are very, very clear. This is the 4-year cycle. I don't usually break it down in my videos because it takes a long time. I'm going to break it down in this video, so bear with me for a moment while I dig into this 4-year cycle. Now, a lot of people would convince you, or would try to convince you, that the 4-year cycle doesn't exist anymore, and that is because they're basing the 4-year cycle off of percentage gain per cycle rather than date length per cycle. I would say that the 4-year cycle is much more about date length, or in other words, much more about time frames and time between cycles rather than about percentage gain between cycles, because percentage gain is always going to change, right? Obviously, Bitcoin's not the same now in 2013 as it was, not the same now in 2013 as it is now in 2020, and so how are the percentage gains going to be even relatable? And you can't just apply an easy calculation. We only have 3 data points. What you can do is make connections between the dates and the time frames, because at the end of the day, it's called a 4-year cycle for a reason. It's not called the 4-year cycle with a blow off top and 200% gain with this happening in this certain amount of time. It's called the 4-year cycle. Every 4 years, there is a halving. It's based on dates fundamentally. People try to add percentages to it to make it more precise, but it's not meant to be precise. It's meant to be quite vague. So let's look into the 4-year cycle. What does it suggest? It tells us that Bitcoin is going to be bottoming out before, or most likely within the months of November to December this year at the 200-week SMA 24K. Okay? I want to be clear. The date range is debatable. November to December is debatable. I would say Bitcoin can bottom out any time between probably July and December. If I had to pin it down, if I wanted to pin it down, I would say it's most likely to happen within November to December. Also, 24K is debatable. It's based on historical trends. 24K, the reason we come to that conclusion is because looking at the 200-week SMA, that is the lowest point Bitcoin has ever gone on a weekly candle close. Yeah, you can see some wicks below it. It's this green line here. You can see some wicks below it. But overall, Bitcoin has spent 15 months of its lifespan testing the 200-week SMA, and not once has it closed a weekly candle below that zone. And hence, the 200-week SMA is the lowest point Bitcoin has ever gone. And since it's the lowest point Bitcoin has ever gone, we have no reason to believe that it's going to go below that point in the future. Now, obviously, we're coming into a recession, and so there is a decent chance we go below that. You know, there's a decent chance we go as low as 14K. However, it's illogical to predict something that hasn't happened before to happen. So at this point, I'm going to say the 200-week SMA is going to be the weekly candle bottom for Bitcoin. I say 24K because that's where I assume the 200-week SMA is going to be in November to December. However, it could be slightly different. Also, I would encourage you to remember that we generally do wick pretty far below the 200-week SMA before coming back up and closing the weekly candle just above it. So when I say a 24K bottom, I'm referring to the weekly candle close. The weekly candle bottom on Bitcoin, in my opinion, will be at 24K, given the data that I'm looking at right now. Now, if we get down to the 200-week SMA and there's no signs of bottoming out, we're still in a bearish trend, everything's going down and the recession's in full swing, then yeah, we can make some predictions, we can change that. But at this point, I have no reason to believe it's going to go lower. No logical reason based off data and statistics, right? So that's the 4-year cycle theory. And if we're digging into it more, and if you actually want to know how I came to these predictions, what you can do is look at these color-coded boxes of text that I've got here. You'll notice there is a strong correlation between bottom-to-bottom dates and top-to-top dates, and also top-to-bottom dates and bottom-to-top dates, all of which point to, when kind of calculated, all of which point to a November to December bottom at 24K, right? That's very important. Now, the 4-year cycle is something you need to understand. If you don't understand it, go ahead and watch my video on the 4-year cycle. I did it a few weeks ago. If you just scroll back on my channel, you'll find it. It's literally called the 4-year cycle, or macro trends on Bitcoin. So, very important video. Watch that and understand this. The 4-year cycle is very much playing out. It is stronger than ever, and it is not gone away. The lengthening cycles theory is completely irrelevant at this point. It's been completely disproven by the macro top in November. The only way you could actually consistently believe the lengthening cycles theory is still playing out is by changing the definition of it to lengthening bull markets rather than lengthening cycles. A cycle refers to the whole trend. A bull market, a bear market, a bull market. That's a cycle, right? But, you know, I think by the November top, we have discovered that that's actually not happening because, you know, surprise, surprise, we've had the same amount of days from top to top in 2013 to 2017 as we had from top to top in 2017 to 2021, and so to call that lengthening is just denying the data. It's objectively not a lengthened cycle. It is the same amount of time. It's a 4-year cycle. So check out the 4-year cycle video I've done. Very important. That suggests November to December, 24K. Now, moving on, what we see here on Bitcoin in the weekly chart is, as some people would have pointed out, a bullish MACD cross. However, it's flattened out just like in 2018, and so it's become irrelevant. What we also see is the fact that the Bollinger Bands are tightening, which suggests a move is on the way, which plays into our potential May crash scenario. We also see that the Gaussian channel is about to flip red. Now, this has only happened 2 previous times in Bitcoin's entire history. It happened in 2015 and it happened in 2018, only weeks before a massive 50% correction in about 2 months on both occasions. And so using that past trend to apply it to future trend, we can see that the Gaussian channel is going to be flipping red in a matter of weeks, probably 2 weeks, 1 week, who knows. Regardless, it's going to be happening in May. And this ties into something very interesting that I've been looking about. The May crash is a very, very, very likely scenario. Bitcoin is very likely to crash downwards or begin crashing downwards in May. Now, some people would say that this conflicts with my opinion on the 4-year cycle theory, right? I just told you. I think that Bitcoin will bottom out in November to December most likely. However, the date for me isn't of massive importance. The price point is. I don't care whether it happens in November to December. If I had to look at the 4-year cycle chart alone, I would say November to December. However, realistically, it could happen at any point this year, right? You have to remember, we only have 3 data points to go from. The date range is not precise yet. It's very rough. It's not meant to be precise. Now, when I look at something like this, the weekly chart showing that the Gaussian channel is flipping red, it's only happened in a bear market before, I start to think of a potential for a May crash, and I start to think of a potential for Bitcoin to bottom out sooner than we expect. Now, that's one piece of evidence for a May crash. There is more. If we move on to the 3-day chart, what we can see is that in the same time the Gaussian channel flips red on the weekly, we see a def cross between the 50 and the 200 on the 3-day, the def cross that triggers a 50% correction in about a month and a half. It did it on the same date as the Gaussian channel flipped red, or roughly the same date, in 2014, it did it in 2018, and guess what? It's going to be crossing, the def cross will be happening on about May 10th or May 7th this year, right? Another piece of evidence for a May crash. Also, if we're looking into another piece of evidence, so this is the 3rd piece of evidence for a May crash here, what we are seeing is a trend in which when the 50-week crosses below the 75-week, we see Bitcoin in the midst of that 50% correction. Guess what? The 50-week will be crossing underneath the 75-week in May. A 3rd piece of evidence, major evidence for a May crash. So there we have it. We have 3 massive pieces of evidence for a May crash, and we have one absolutely gigantic piece of evidence for a 24K bottom on Bitcoin sometime in 2022, most likely towards the end. Now, I will like you to kind of consider that just because we're going to be seeing a May crash, in my opinion, it doesn't necessarily mean we'll bottom out in May. Now, crashes obviously take a long period of time. We could see a May crash down to 30K. I mean, that's a 30% correction. That's a crash. That's considered a crash. And then we could just dwindle around that region for months until, November, and then we finally go down to 24K, right? That would still be considered a May crash. Anything over 20% is a crash, in my opinion. And so when I say a May crash, I don't mean Bitcoin's going to go to 0. I mean, it's probably going to go down 20 to 30%, right? That's a crash. Altcoins, if Bitcoin goes down 20 to 30%, altcoins are going down 40 to 50%. Altcoins are halving in value if Bitcoin goes down 20 to 30%, right? And there's a lot of evidence for that to happen. Now, before I get into the rest of the video, in which I'm going to be talking about total cryptocurrency market cap, the DXY, interest rates, and bond yields, and also I'm going to be answering a few questions here on the screen, I want to give a quick shout out to BitGet. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box and you will receive up to 153 USD deposited into your account as a reward. The total cryptocurrency market cap chart is a chart that measures the entire cryptocurrency market cap in terms of a dollar value. So every single dollar invested in cryptocurrency is measured on this chart. We currently have $1.77 trillion invested in the cryptocurrency market cap. So that's Bitcoin and every single altcoin combined. There's $1.7 trillion. Okay, so that's pretty interesting. Now, This chart actually does abide by TA in the same way that a Bitcoin chart does. What we can see is that it has a major uptrending line stemming from January 2021, and what we can see is that major uptrending line is currently sitting around, let me just check, around 7% below the current prices, which means if the total cryptocurrency market cap chart closes a daily candle 7.5% below current prices, it will be losing that uptrending line, and it will be sending it straight downwards towards 1.1 trillion to 1.29 trillion, right? This would be a correction of around 27% to around 36% to current prices. That's a major correction, right? And given the fact we think we're going to be seeing a May crash, or I think we're going to be seeing a May crash, I think that is going to happen. And I think there will be a massive domino effect across the entire cryptocurrency market cap starting in May, where we start that major move downwards, right? That's my theory. That's my prediction. Now, I want to make it very clear. Although I think that's going to happen, I don't really care if it does, right? Because the macro structure, in my opinion, doesn't really need to call for a May crash. What it does need to call for is a retest of a 200-week SMA, because I think the macro tops in. It doesn't matter when it happens, it matters if it happens. I want to make that very clear throughout all my analysis. I made it clear in the 4-year cycle chart. I don't care about dates, I care about prices. What I care about is 24K, not when it's going to happen. However, if I had to predict when it's going to happen, I'm thinking it's going to start in May and it's going to end in November. That's my prediction. So moving on to the macro chart. And the DXY is something I'd actually like to bring up quite extensively later in the video, because I have a few comments that I'm going to read out and reply to. However, the DXY is basically a chart that measures the strength of the US dollar in relation to other global currencies, and also other other global currencies in relation to like the pound, the euro. We're looking at the Australian dollar, the yen, right? So this is what this chart does, and essentially what it kind of represents is the strength of the US dollar as a whole. And so when people are selling out of their assets, they're essentially buying into the DXY, because buying into the DXY is the same thing as buying into the dollar or holding dollars. If more people are holding dollars, the DXY goes up. Okay, so what we see in a recession, and what we see when economic times are very, risky, we see the DXY pump. Why have we started to see this since May 2021? We've started to see people understand that, hey, maybe the economic situation in the USA isn't as good as they thought it was. Maybe everything's kind of going a little bit, south. So when we see that happen, we see the DXY pump and we see Bitcoin go down. Now, Bitcoin is very reverse correlated to the DXY. So if the DXY goes up, Bitcoin goes down. And when the DXY has been going up, it's been accelerating upwards. We've noticed that Bitcoin has started dwindling quite massively and showing a massive amount of weakness. Now, the DXY is heading up to 5-year-long resistance. And a lot of people would point this out as a reason why the DXY wants to go down and needs to go down. Okay, I would say that that's kind of a stupid theory. It's a bit irrelevant. And I want to point out a Twitter post I did yesterday about it. So I said, yes, 103 is a major resistance zone on the DXY. And given this fact, lots of bullish market participants are labeling this as a price range that it's the perfect time to buy for Bitcoin before a DXY projection. Because essentially, well, if the DXY rejects, Bitcoin goes up, right? So a lot of people are saying that because the DXY is heading up to major resistance at $103, that red box, Bitcoin's probably near a short-term bottom and Bitcoin's probably going to reverse here. However, reason one why this is incorrect is by referring to $103 as a resistance, you are essentially rejecting the TA. The TA is that the DXY is actually in a very bullish structure. It's in a macro W pattern, right? It's in a macro double bottom pattern. And hence, it should actually be breaking to the upside rather than to the downside. Now, people would say, how's this a W pattern when we have this massive wick up to the resistance zone here? That was the COVID drop, and so that can be invalidated as something that actually didn't happen, right? It was a black swan event. It doesn't actually matter according to the TA. The top for the center of the W was here, and hence this is a W formation. Now, a W formation is a formation that breaks to the upside, and hence if a DXY goes further up, Bitcoin's going to go further down. Now, the second reason that I listed out and kind of was the fact that, well, we're going to be seeing a recession, and, or we are already in one at least. Now, under this conclusion, what we can assume is that people are probably going to be selling their assets, selling their risk-on assets, for dollars, because they want to hide in dollars during the time in which a recession, which is when stocks dump 50%, Bitcoin goes down 50%, everything dumps, right? So they're going to sell all of that and go into US dollars, which means the DXY is actually going to go up, right? So to point at this $103 resistance zone and hype it up as this 5-year-long resistance and say, the DXY is going to reject, Bitcoin's going to go up, the bottom's in, is simply denying the TA. If you want to zoom out as well to the weekly chart, or a 2-weekly chart, who cares, what you can see is that the DXY is actually recently broken out of a 21-year-long triangular formation. And so this just goes to show that you're even further denying the TA when you point out this $103 resistance zone, because you're not even pointing out the fact that we've broken out of a 21-year-long structure and we're seeing a 5-year-long double bottom structure. This is very much a blue structure for DXY, which means it's a bearish structure for Bitcoin. Now, when we're looking at something like bond yields, we need to understand that bond yields are, in a sense, predicting the way the interest rates are going to go. Bond yields are essentially a risk-reward ratio given by the government on government bonds. Now, if the government agrees, or if the market participants and the government collectively agree that the market is much more risky, or the economic situation is much more risky, they're going to give out higher yields on bonds. So, bond yields effectively predict how high interest rates are going to be. Right, bond yields have gone up 18x in the last few months. Right, bond yields are at prices at yield rates we haven't seen since around September 2019 or since around February 2018. Looking at where the interest rates were on February 2018, for example, we can see that they were at around 1.5%. They are currently at 0.5%. This is telling us that, according to the bond yields, interest rates are dramatically undervalued, which means interest rates need to rise another % in order to keep up with the market. This means that interest rates are going to go up dramatically over the next few months. Now, when these interest rates go up, and if interest rates go up, as you guys would know, you guys are paying more money on your mortgages, you're paying more money on your credit cards, or your credit card debt. Right, it's the same for companies. They're paying money on debt, and so they have less money to spend on improving their company or releasing new products, and so everything just kind of slows down economically, and hence if everything slows down economically, companies have to, company stock valuations actually lower, and when company stock valuations lower, at the moment, the trend is Bitcoin's valuation lowers, right? So S&P 500 goes down, Bitcoin goes down. That's the trend at the moment. Yes, it could change. However, we can't bet against the trend. So this is a new segment I'm going to be doing on every video or most of my videos. I'm going to pick out a few comments. I'm going to reply to them in the video because it's actually much easier for me to reply in the video rather than typing it out. And it's much easier for the audience. It gives more entertainment, more content. So Nick says, if Bitcoin crashes in May to June, what does that do to the November to December prediction of 25K? So essentially, I've kind of spoken about this a bit in the start of the video. Just because something crashes in May or June, it doesn't necessarily mean it needs to bottom out in May or June. Now, as I said, a crash can be 20 to 30%. We could crash 20 to 30% down to 30K, lurk around that region for a few months, and then go down even more in November to December. You know, alternatively, we could crash all the way down to the 200-week SMA in May or June, or starting in May or June. You know, the date range is not my concern, it's the price that really matters. Jason says, any new thoughts on what happens following the retouch of a 20-week SMA, 200-week SMA, and how do we bounce from there? So he's referring to my macro bottom prediction of 24K. What happens once we get there? He also says, many think we will see 100K rally before the cycle ends. So essentially, you know, looking at the 4-year cycle theory, looking at the 4-year cycle chart, it's quite clear that the cycle has already ended. That 100K hopium is just that, in my opinion. Hopium, it's not based in reality. There's no data that suggests it, right? The only way we can get to 100K is if Bitcoin decouples from the rest of the financial markets, which is possible, right? But the fact of the matter is we're going into a recession, right? Bitcoin is still linked to the financial markets. We've seen it so far, right? If it wasn't, Bitcoin wouldn't be going down. Financial markets have been going down since November, so has Bitcoin. If Bitcoin was decoupled, Bitcoin would be going up right now. Now, there is the argument to be made, right, that Bitcoin could go upwards now, and it could go upwards because we're going to see a recession, and so seeing as Bitcoin is the ultimate, you know, enemy of the financial markets, traditional markets, or the dollar, you know, Bitcoin's going to go up when we see that recession. That sounds good on paper, however, it's simply not playing out. And so I don't think we're going to see 100K. I think the cycle has ended as per the 4-year cycle theory and as per logic, because the logical solution right now, the logical trend is that Bitcoin is following traditional markets, and seeing as traditional markets are going to go further down during a recession, Bitcoin is probably going to do the same thing. Now, as per the first part of your question, which was what's going to happen when we get to the 200-week SMA, the simple answer is it's impossible to tell. We don't really know. We actually don't even know whether it's going to bottom there. We can predict it's going to bottom there, but given the macro environment, it's relatively likely it won't. Now, basing off data and basing off what we've seen historically, we're compelled to assume it's going to bottom there, right? Because it's only bottomed there before. It hasn't gone below that before. And so we can't really predict based off logic and based off fundamental investor principles, which is invest with your trend until it ends, that it's going to go below there. So at this point, the most logical thing to assume is that it's going to bottom out there. However, once we get there, and if it doesn't, then we can start to kind of de-risk and kind of, you know, make different assumptions of where it's going to bottom. But at this point, I want to make it very clear, at this point, that's the most logical thing to assume, and that's why I'm assuming it. Now, what's going to happen when we get there? Well, generally, we see a bit of consolidation on that region before starting a new trend upwards, right? In 2015, we saw about, you know, 10 months, 9 months of sideways movement around that price region. In 2018, we saw about 5 months of sideways movements on that price region before we started shifting upwards gradually. So, you know, again, if we're basing it off a trend, which we are, we have to, the trend is we're probably going to go down to around 24K in November to December. We're probably going to go sideways for about, you know, 6 months at around 24K to 30K. And then we're probably going to start gradually shifting upwards in 2023, like probably Q2 2023. And then we can start forming a new bull cycle, right? So that's what the trend is telling us. And we've got nothing to go off right now except for the trend. So we have to trust the trend. So that's it. Thanks for watching, guys. Hopefully my voice is better by tomorrow. You'll notice that I've been kind of speaking a little bit oddly. It's just because I really like feel kind of terrible. My, you know, brain functionality right now is not 100% either. But thanks for watching anyway, and I'll catch you in the next one. Cheers. Leave some comments, by the way. Leave some questions, and I'll try to answer them in the next video in that comment section segment. Cheers.